Hi Charlie, welcome to the 19th day of my video polling analysis experiment where I break down and analyze the LinkedIn poll that I posted last week and that closed this morning. Today's topic covers a few topics that I've been discussing frequently during these 19 days of video polling analysis, and that is financial topics. I've posted a lot of these polls and talked a lot about them over topics such as day trading and investing, and that's not because I'm a licensed financial professional. I'm not, and none of these videos should be taken as financial advice. You should consult a financial professional instead, but because a lot of my audience is involved in the financial services industry and I want to create content that kind of resonates with them, that makes them willing to participate in my polls. So anyway, today's poll question is, which investing strategy do you prefer? There were 3 answer choices: conservative, moderate, and aggressive. Now, I didn't define exactly what I meant by each of these strategies, but I think it's one of those things that you just know. Like if you're a really safe investor who's only choosing to buy federal government bonds, you're probably going to consider yourself a conservative investor. By contrast, if you're using a lot of margin, if you're buying a lot of volatile stocks, you'll probably be an aggressive investor and view yourself as such. So anyway, there were 83 votes on this poll question, which is about in line with the average. 18% of them said they were conservative investors, 54% of them said they were moderate investors, and 28% of them said they were aggressive investors. So not a surprise that most of my voters consider themselves moderate investors. A lot of my voters do tend to be more established professionals who have been in their career fields for 10 to 20 years. So obviously they're not as inclined to take risky investing strategies such as using a lot of margins or trading options or day trading like perhaps some younger investors would be more inclined to do. So anyway, on to some interesting statistics about investing. Again, none of these are supposed to be construed as financial advice. I am literally just stating the facts and letting you interpret them on your own, and you should consult a financial professional for advice about investing and other financial matters. So anyway, the average person is 33.3 years old when they start investing, which isn't a surprise because in your 20s, you're usually trying to get yourself financially established, paying down student loans, just getting acclimated to adult life, maybe making some not wise financial decisions because you're just young and inexperienced, and it's probably your first time living on your own without anyone closely supervising you. So anyway, 33.3 years to start investing kind of makes sense considering the trajectory of one's life. Also, only 29% of Gen Z have a retirement account. Now, that doesn't just include a 401k issued by an employer. It can also include a Roth IRA or a traditional IRA that you can set up no matter how you earn your income, just so long as you have earned income, because that's the only kind of income you can put into a Roth or traditional IRA. 44% of Gen Z admit that they don't invest due to limited funds. That makes sense because all of Gen Z is currently under 30 years old and even teenagers, so it makes sense that they don't necessarily have the most money to invest if they're still trying to pay down debt, get themselves financially established, etc. And here are some investments that Americans consider to be the best long-term investments. Starting off at the top of the list, we have real estate, which 35% of Americans believe is a good long-term investment. Do I agree with that? At times, yes, it can be a good investment, but we also had an entire financial crisis barely 2 decades ago in 2008 that had to do with the housing market where home values were plummeting, and a lot of people had underwater mortgages where the debt that they owed on a home was worth more than the actual home itself, which is not a good situation to be in. But maybe the situation has improved. I admit I'm not an expert in this area at all. Please consult a financial professional for actual advice about this. Coming in second is stocks and mutual funds, which 21% of Americans believe are good long-term investments. Third is savings accounts and CDs. That's 17%. Coming in fourth is gold at 16%, and coming in fifth place is bonds at 8%. Now, I don't know if these choices were exclusive, whereas the respondents had to pick the investment that they considered to be the best, or if they could kind of rank where they thought these investments fell in their kind of hierarchy of usefulness. But anyway, it's pretty interesting to see that real estate is still considered, at least according to this study, a more popular and safe long-term investment than stocks and mutual funds, because admittedly, stocks are easier to get invested into than real estate. Well, unless you have a REIT, which is basically a real estate investment consolidated into equity form for easy purchase. But again, most people tend to start, I believe, with investing in stocks and mutual funds, and maybe if they save up enough money, then they can start investing in real estate by, say, purchasing a home or a condo. So anyway, Charlie, thank you for listening to my spiel about investing again for the third time. None of this is investing advice. Please consult a financial professional for financial and investing advice. I just have to put that disclaimer out there. So anyway, Charlie, thank you for listening to my spiel about this. I hope I gave you some insights into what you should be doing to maximize your chance of building long-term wealth, again, with the help of a financial professional. Thank you for listening to my analysis, and stay tuned for my 20th analysis tomorrow. Bye!